Hello, ladies and gentlemen. My name is Hoang, and today I'm gonna present a topic about mobile payments, fintech versus the bank science. We will explore how mobile payments are evolving, the key players, and respond to four specific questions that highlight the challenges and opportunities in this field. So let's start with a quick overview of the case study. The case study talks about the fast-changing world of the mobile payments, where fintech startups, big tech companies, banks, and even large retailers are all competing for dominance. On one side, we have fintech firms like Venmo that began with small innovation such as peer-to-peer money transfers. On the other side, tech giants like Apple, Google, and PayPal use their platforms and huge user bases to boost their mobile wallets. Meanwhile, banks and credit card companies, which have always been central to payment systems, are also stepping in with services like Zelle to protect their role. The study highlights that while young people adopt mobile payments quickly, but there are still many consumers rely on traditional credit and debit cards because of their trust, habits, and convenience. Overall, this is not just about the technology, it's about who controls the relationship with the customer and who earns from every transaction. That is why mobile payments have become such a competitive and fascinating market. With that overview in mind, let's move on to the case study questions. So first, let's look at the different types of mobile payments. There are three main types. The first one is the universal proximity payment system, like Apple Pay, Google Pay, and Samsung Pay. These allow consumers to pay at many different merchants' point-of-sale terminals, as long as the store has NFC technology. The second one is branded proximity payment system, such as Walmart Pay or Starbucks Pay. These are limited to a single merchant stores, but they give the retailers strong customer loyalty and valuable data. The last one is B2B, or also known as B2B payments, such as Venmo, Zelle, or Square Cash. This let people transfer money directly to each other through a mobile app, which is especially popular among young users for splitting bills or paying small debts. The key difference is who you can pay. Universal system work across many stores. Branded system tie you to one retailer. And B2B payments are for direct transfers between individuals. Now, let's talk about adoption. Who is actually using this app? The fastest adoption is among millennials and Gen Z. In fact, there are over 70% of millennial smartphone users in 2022 that uses B2B payments, compared to only about 38% of baby boomers. So why? It's because younger generations are comfortable with smartphones and digital apps. They use less cash and fewer checks compared to older generations. They value speed, convenience, and social features, like Venmo's ability to share the payment with friends. In contrast, the older users are more cautious. They still trusting credit and debit cards for their familiarity and security. Next, let's examine the competitive landscape. Why small fintech firms struggle against big players? The fintech startups often innovate quickly, but they face big obstacles. The first one are tech giants like Apple, Google, and PayPal on the platforms. The smartphone operating system and large-scale payments network. This gives them built-in advantages. The second one are brand trust and existing customer bases heavily favor established giants. Consumers are more likely to trust well-known names when it comes to money. Acquisition reduces the competition. For example, Venmo, a startup, was bought by PayPal and then expanded rapidly. And the last one are resources and reach. Tech science have global scale, financial power, and the ability to integrate multiple services into super apps, making it difficult for startups to keep up. So while fintechs bring the creativity, they often get absorbed and overshadowed by larger firms. Finally, let's take a closer look at Zelle, one of the fastest growing mobile payment services. Zelle is a digital B2B payment service created by a consortium of major U.S. banks, including J.P. Morgan Chase, Bank of America, and Wells Fargo. It allows users to transfer money almost instantly using just an email or phone number. Its rapid growth comes from several advantages. The first one are trust and scale. Zelle is directly connected to over 10,000 financial institutions with strong backing from big banks. The second one is the convenience. Transfers are free and nearly instantaneous, unlike Venmo or PayPal, which may take a day. The third one is integration. Zelle is built right into many mobile banking apps that customers already use, reducing barriers to adoption. And finally, by 2022, Zelle had more than 60 million users and processed $365 billion in payments, outpacing Venmo. In short, Zelle grew quickly because it combined bank-level trust with the speed and simplicity users wanted. To wrap up, the case study showed that mobile payments are a dynamic space where fintech innovators, tech giants, retailers, and banks all compete for dominance. We have seen that there are three different types of mobile payments. The adoption is led by younger generations. The startups face steep challenges against tech giants, and Zelle demonstrates how banks can reclaim ground by leveraging their existing customer trust. Ultimately, the future of mobile payments will depend on balancing innovations, convenience, and security while earning consumer trust. So thank you for your listening. I hope this presentation gave you a clear understanding of the key trends and challenges in the mobile payment industry. If you have any questions or want to discuss more about this topic, feel free to contact me with the email below. Goodbye and have a good day.